Hey guys, what is going on? Welcome back to my Robinhood portfolio. What I thought I would do now is talk a little bit about leverage. A lot of you guys have been asking exactly what leverage is all about, so I thought I would kind of go through in detail what it is by using an example of two different real estate investment trusts. So very simply, leverage is simply borrowing money, borrowing capital to fund particular business's operations, to fund its investments. The example I have is real estate investment trust, but another good example is closed-end funds. You basically borrow money from a bank or elsewhere to buy underlying assets for their fund to generate income. Real estate investment trust is pretty easy to conceptualize, basically buying underlying property, leasing property, so on and so forth to make an income. And as you can imagine, by borrowing this money, you basically pay the person lending it to you, the bank or other institution, percentage per year, APR, for that right to do that. As you can imagine, it's kind of risky doing this if you invest in particular assets that do not perform. You're going to be losing quite a bit of money, not only on the asset itself, but also on that fee that you have to pay for that additional capital. On the flip side, it can also magnify returns by quite a large margin because you're basically using money that you would not ordinarily have and then getting a return on that. And typically, if the return is great enough, you can pay off the fee or the annual percentage rate that you're using to pay for that particular amount of money that you borrowed plus the return. So it's basically free money as long as your rate of return is greater than the annual percentage rate that you're borrowing the money for. So kind of want to go through a couple different examples here. New residential investment corp here. This is a real estate investment trust. And to kind of detail or dive into leverage, so this particular REIT, real estate investment trust, has a leverage ratio of 4.27. So what that means is basically it has borrowed a little bit over $14 million, but it only has about $3.5 million in assets. So ordinarily, if it was simply investing with its own money, it could only get a return on $3.5 million. But since it's borrowing another $14.5 million, you can see how it can magnify its return. But on the other hand, if those investments did not pan out, not only would you be losing money off of that, that money would have to be paid back at some point, but also the interest on that money as well. So it's a very, very risky kind of endeavor. So high risk, high reward once again. Another real estate investment trust that I actually have, FRT. It's another real estate investment trust, but this one has a little bit less leverage. So the leverage ratio in this one is, I think, 1.6. It basically has $3.3 million in total liabilities and a little bit over $2 million of assets. So you can see it basically is using leverage, but a lot less than that last fund. And you can see that this is a much more well-respected, much more stable fund. FRT is one of the most respected funds, along with O here, another real estate investment trust that I just recently got into. Realty Income Delaware. Both of these have very low leverage ratios, unlike that prior one, New Residential Investment Corp, with a very, very high leverage ratio. So essentially, leverage is borrowing money to invest with. Very risky. You can lose quite a bit of money, but also it can magnify returns. And Robinhood Gold, like I said, is an example of this. You basically are paying Robinhood for that extra capital, then you use that extra capital to invest in, and hopefully you not only make a good return, but return that's much larger than the amount that you have to pay Robinhood. If it's any less than that, you're basically losing money not only on the investment, but the annual percentage rate and plus taxes as well. All investment income you have to pay taxes on as well. So right off the top, you can take off, another 20, at least 15 to 20%, depending on what income tax bracket you fall into. So that's kind of what leverage is: simply borrowing money to fuel your investments. It can be very risky. You can lose a lot of money, but it can also magnify your returns. So yeah, let me know what you guys do with leverage. If you guys like leverage accounts, there's a whole array of different leverage accounts. I kind of went through a video about a month ago about ones that track the S&P 500. If the market trends down, they have inverse ETFs. They have ETFs that go along with the S&P 500, along with all the different indexes out there. So it's very, very risky, but also it's a very good way of magnifying returns as well with a little bit of capital. So yeah, just kind of wanted to talk about leverage. Yeah, and kind of with that, I'll end the video. As always, if you enjoy my videos, feel free to like, share, and subscribe. I hope you guys have been learning as much as I have been learning. And until next video, we'll see you then.